Hi and welcome to Trade of the Week. This week I've chosen a long bet on RTZ, although I didn't make this trade myself. This trade was a textbook example of trading the breakout. The price then returned to test support at the breakout point. Support held firm and the move was confirmed by the RSI reading. RTZ is one of those stocks with a classic rising trend line, crying out for traders to buy the dips. Last week saw a sell-off from the 52-week high, and Monday's nervous open gapped down to within spitting distance of the 21-day moving average. But with the moving average holding firm and the price consolidating in a 36.20–36.50 range, this was an opportunity to buy into a rising trend. Using a 30-minute chart, the idea here would be to look for a break above the consolidation range and above the 21-period moving average. Let's show that. So we want to break above that line. To add credibility to the move, the price would also need to go back down and test support at that breakout point and have the move confirmed by an RSI above 50. In terms of a stop loss, there were two options. Either to place it at 36.10, which is just below the day's low, or at 36.40, just below the recently tested support and resistance line. I prefer the second option because the trade is based on support at 36.50 holding firm. If the price returns below that, then I should be out of the trade. My first target level would be last Friday's resistance at 37.45, and after that I'd run the balance with a trailing stop loss. So what happened? The green candle at 2 o'clock broke out the trading range and closed above the moving average. That's that one down there. But this isn't my signal to trade. What I need to see then is a test and move back down to test that resistance line. And that happened with the next candle. It dropped back down to test the point, the support held firm, and the RSI by that point had pushed above 50. So what I'd have done here is opened a bet at the start of the next candle, which would be there. Buying 36.86 on a £5 bet. My stop loss at 36.40 would mean an overall risk of £230. The next candle was a shooting star reversal warning, but there was no confirmation there, so the price continued higher, ending the day at 37.25. And the following morning the price moved higher again, taking out my limit order to sell £2 at 37.45. That's there. Now because this was a hypothetical bet, I can't say for sure when I would have exited the trade. But being honest with myself, I reckon I would have sold at 3800. That's the closing price on the 11 o'clock candle that followed a shooting star reversal candle. And that was there. As was later proved, this wasn't a sell signal, but I'm sure I'd have been conned into taking my profits at that point. So my imaginary profit would have been 59 points on £2 and 114 points on £3, giving a profit of £460. You can see that the risk reward wasn't great, but that's because I delayed my entry looking for a safe confirmation before trading. There were several opportunities to jump in earlier, but with a higher risk of failure. Have a good weekend.